Hello guys, once again welcome back to my YouTube channel. In today's video we are going to look at 5 powerful websites that every trader should know, and number 1 is globalrates.com. Let's go. So type it in the search bar and hit enter. Here is the website globalrates.com, and what is it all about? Globalrates.com is where you are going to get both the current and the historical interest rates for different economic countries. As they are saying, you will find economic indicators such as inflation, and you will be able to compare different rates and view them clearly in tables and charts. Let us first know what it is all about. So let's click on now About Us page, and you see what exactly is globalrates.com. So here is the background information. You can see since 2009 they go to source for international interest rates and economic indicators. We launched the globalrates.com website in 2009, and our goal is to keep visitors from all over the world informed about the developments of a large number of rates. This includes both national and international rates, international interest rates, and other economic figures. Since its inception, millions of people from 200 countries have visited globalrates.com, and in September 2023, which is this year, we launched a new site. Our objective is to add a lot of valuable content in the future to assist even more visitors. Alright, so you can see if you want to contact them, here is their email and their phone number. And now how do they earn? Our services are for free. However, building and maintaining the website and keeping all the information up to date does incur costs. Since we are not a charity, we need to generate income somehow. Our earnings mainly come from advertisement revenues, affiliate, and other collaborations. Alright, so basically we've known what globalrates.com is all about by giving us valuable content or information about different countries and how they are performing economically. Alright, so let's click on interest rates, and I'll go to banks, central banks. Here, this is where my interest is, because in forex trading we use interest rates as a part of fundamental factors, because in forex trading we use technical analysis and the fundamental analysis. So when it comes to fundamental analysis, this is where we need news from different countries and what is happening, their economic aspects. So this is where banks or central banks of different countries come in. So I'll go to interest rates, then I click on central banks, then it is loading, you wait. So you can see, let's scroll down and we see central banks interest rates, current and historical interest rates of the major central banks worldwide. On this page you will find an overview of the current interest rates of a large number of central banks. You will find the latest rate of each central bank and the most recent interest rate change. Clicking on the name of the bank will take you to a page with extensive additional information, including a complete overview of current and historical. You can see latest interest rates. So when we come to American bank, where we have the US dollar, you can see the current interest rate is at 5.50%, whereas the previous one is 5.25 as of 26th July 2020. See, what does this one mean, or the long-term overview when you are trading? It means the US dollar has been gaining in value. But since we trade currencies in pairs, let's see another one. Australian Central Bank, it is at 4.10 and it has been at 3.85. This has also been increasing, okay, since June 6th June 2020. When you come to Brazilian Central Bank, we have currently it is at 12.25, and even previously it was at the same rate. So it means it is stagnant, it is consolidating, it is not increasing in value. British, which is GBP, United Kingdom, it has been on 5%. Currently it is at 5.25. So let's take an example. This is as of 3rd August this year. Okay, so let's take an example that you are trading this pair of GBP USD. So as you can see, the interest rates for USD is higher than that of GBP currently, because that of USD dollar is at 5.50, whereas that of British Central Bank is at 5.25. What does that one mean? It means
you should be selling because the base currency in the pair, which is GBP, has the lower interest rate compared to US dollar, which means you'll be selling GBP USD as the long-term perspective, like for swing traders, not the short-term perspective. So let's look at another one. Normally look at the countries with major currency that you trade. For example, USD, GBP, CAD, Euro for European Central Bank. So as you are looking at Euro vis-a-vis USD, here you can see the Euro is at 4.50%, which means it is less than 5.50% of USD, and that indicates traders and investors will buy USD and sell Euro, and this means as a forex trader trading Euro USD, you will be selling it, where the base currency is Euro and quote currency the USD. And with this information, you will be looking or comparing what is happening in the charts as the long-term perspective of such a pair. Just keep in mind this data will give you the long-term perspective. So let's look at JPY, Japanese Central Bank. I personally trade JPY. You can see it is in negative from 0.00 to negative 0.10%. So if you are having such a pair like USD JPY, it means you'll be buying such a pair because you have seen the dollar is at 5.50%, while JPY at negative 0.10%. This means in the real sense, no trader and investor will put or invest his or her money in such a bank like that of Japan, where the return on investment becomes a negative. Obviously, it's clear, but rather you would buy a dollar that will give you 5.50% interest rate. And if you observe keenly, the JPY currency has been having low interest rate from all the way 1st February 2016. So it has been weak against the dollar. All right, so the other currency of my interest is AUD, Australian Central Bank. It is at 4.10%, which is also below 5.50% of American Central Bank, which means I would be selling AUD USD. You can see, although from AUD's previous interest rate shows as increased over time, but it's still below that of USD American Central Bank. So buyers are still in control for AUD USD as a long-term perspective. Point of clarity and correction, I've been using these currencies in terms of losing value and gaining value, but we are looking at it in the perspective of traders and investors, where investors and traders want to put their money in such a currency which will generate a lot of high interest rate for them, because it will be a benefit. If I give you like money, or if I save my money or my funds into your bank and you give me like 5% and another bank is going to give me 2%, where am I going to put my money? I'm obviously going to put my money in such a bank which is going to give me 5% because it's a higher interest rate. In doing so, very many traders and investors are going to demand, or rather put their money, their savings, or buy such a currency because they expect high returns vis-a-vis the other bank or central bank, which is going to give low returns in terms of interest rate. I hope that is clearly understood. The second website on the list is currentstrengthmeter.org. Type that in the search bar and it looks like this.
Okay, so you can see this is the current strength meter, and the question is, how do we use it? Let me refresh. Or as whenever you are coming to this website, even if it is after 10 minutes, you refresh so that you can get up-to-date data. I'm recording this video on Saturday, and the market has already closed. Okay, so let me refresh and I see. Okay, so we are on Saturday, and assuming today we are trading these assets, or the week ended actually, the week ended when the highest pair with the highest volume was New Zealand dollar. followed by GBP, followed by AUD. You can see these green ones. As long as it reaches at the top, it means it is the highest one with volume, or which is highly traded. So how do you take advantage of this website? Number one, you look at the one with less volume, which is less traded in that very day, and you compare it with another one which is highly traded, and you see if you can get that pair. So here the least one which is traded is USD vis-a-vis the highest, which is New Zealand dollar. Do we have that pair? If you're a forex trader, I hope you know. Okay, so the asset is New Zealand dollar USD. We have that on New Zealand dollar USD, which means you'll be buying New Zealand dollar USD, because this one is highly traded vis-a-vis the US dollar. So the other one you can pick is GBP USD. So within a day, this is for a short-term outlook. Whereas the other first one we looked at, which is the globalrace.com, it is for a long-term outlook. This one is going to help you for a short-term outlook of a pair you want to trade. So here I would pick GBP vis-a-vis USD, and I will be buying this one because this one is showing me GBP is highly traded vis-a-vis USD for a short term. The other one I would pick is this one, AUD USD. Okay, let me see if we have AUD and probably CAD, because it is yes. Another pair we can see is AUD CAD, and you will be buying this one. Okay, because this AUD is highly traded vis-a-vis the CAD, Canadian dollar. Okay, this is Australian dollar. All right, so this is how you just use it. You look at the one which is highly traded vis-a-vis the one which is less or the least traded assets. Okay, so the best currency out of that pair is what will determine whether you are going to buy or to sell. In this case, if I pick New Zealand dollar vis-a-vis USD, I'll be buying, and the best currency will be the New Zealand dollar. Remember, you are buying at the best currency and you are selling the quote currency. Okay, so here if I pick AUD CAD, the best currency is AUD, and I'll be buying AUD while selling the Canadian dollar because it is less traded. Okay, and if you apply the same concept of supply and demand, you know when something has highly traded, it means high demand. So if it has a high demand, it will be expensive, people will be buying that one. But if it is less traded, it means people will be selling that one. It is losing value at the moment. Okay, as a short-term perspective. All right. So what is a current strength meter? In simple terms, current strength meter is a technical indicator that determines the relative strength of currency. It exists for both MT4, MT5, and other trading platforms. Also can be found online at sites like this one. So what I'm using is already a site not on MT4 or MT5. So real-time exchange rates are used to measure the aggregate comparable strength. Simple meters may not use weighted calculations, while more advanced like this one use their weighting factors. Our calculation methods also shows the direction of the change denoted with an arrow close to the name of the currency. So which arrow are they meaning? The arrow is this one. Okay, so repeat it. Our calculation method also shows the direction of the change. So when the arrow is facing down, it means it is likely to change. If it is down, then it is likely to drop, denoted with an arrow close to the name of the currency. The algorithm looks at the previous 24 hours on a daily basis, guys, to calculate the overall strength and combines all currency pairs associated with the currency The data obtained as a result of the calculations is usually displayed as a chart. Okay, so how does it work? Those who don't know what currency meters do, they measure main currency strength in the forex market: USD, GBP, Euro, Swiss francs, Japanese yen, Canadian dollar, New Zealand dollar, and the Australian dollar or AUD by comparing all 28 crosses between them. These are major currencies. If you know a forex, so if you are not a beginner, you know the difference between major currencies and cross currencies or exotic ones. So it's a quicker way for forex traders to see whether the market conditions positively or negatively affect their positions. All right, let's look at how this technical indicator works and how it can help traders make informed trading decisions. There are 5 steps in all. 1, identify the base currency. As I've been saying, if you have a AUD card, the base currency is AUD. Then the quote currency is CAD. Match the base currency with the all available forex pairs. Calculate the relative strength for each pair. Pair the currency. Calculate the average score, and then use the results. Okay, so I think in your free time you can visit this website, currentstrengthmeter.org. You'll be able to get more information. So let's go to the third website, guys. The third website is we are going to find it in babypips.com. It is risk off meter. We are going to find this one in Baby Pips. Baby Pips, I hope everyone knows about it. If you do not know, I have already made a video about Baby Pips. Be sure to go and check it out if you're a complete beginner and you do not know about Baby Pips. So let's click there. Baby Pips. This is what I'm talking about. How is the risk on risk off meter calculated? The risk on risk off meter is a comparison of several different financial instruments that are commonly used to measure risk appetite in the market. Okay, the meter tracks current price changes relative to the previous day's price. It tracks current price changes relative to the previous day's price. Don't you think that is very cool? So let's go to it. Risk on, risk off, market sentiment. Okay, as it is loading, I want to tell you this tool is a powerful one, which is very much used by different traders or investors online to know how they are going to move their funds from one asset class to another asset class. I repeat, this risk on and risk off meter helps traders and investors to move their funds from one asset class to another. How? We are going to read through and you come to understand how exactly it works.
So basically what you are supposed to know about this risk on risk off meter is to understand which trading mode are we in. Are we risk on or risk off mode? Obviously you can see we are in risk on mode because you can see the watch arrow are pointing to risk on area, which is about 50% or 82. You can see here this is the risk off, this is in neutral, this one is risk on. So you will be checking where this arrow is pointing, this one here. So we are in a risk on mode, and if you want to know which asset you should be investing in, the other ones we talked about that are highly yielding, like equities, commodities, where we say traders tend to shift their capital from lower risk assets like government bonds, gold, and safe haven currencies to high yield assets such as equity, commodities, and high yield currencies like AUD, New Zealand dollar, etc. Those are the assets to focus on in risk on mode. So basically this is how it helps traders to align their trading decisions depending on sentiment of global traders and investors. So don't forget to refresh whenever you visit this website. The website is forexfactory.com, which will be giving you up-to-date news about different global economies Established in 2004, it was one of the oldest online communities dedicated to forex trading. It's known for its comprehensive, reliable, and real-time information on foreign exchange markets, providing resources like market news, active forums where traders from around the globe engage in insightful discussions, share experiences, and offer advice. It hosts reads on diverse topics, assets, technical, and fundamental analysis, among others. Click on Join tab, input your username, password, retype it to your email address, click on Agree Terms and Conditions, then join. Then explore all the features on the interface by clicking on it to check how it works, and you will see forums such as interactive trading, trading systems, discussions, platform tech, etc. And other trades, you have got the current pairs being traded like USD, JPY, USD CAD, gold, etc. Then news, which is the main reason why traders use this website. It's calendar showing you when we have the news, which news, and how to use them for on your advantage. And you can see the previous week of market news and the current week's news. The first thing you should do or you should know here is to know the periodic news you are interested in. Is it for this or that very week, or the previous week or month? And you can use that top left corner options or arrow here. So let me check for this week's news. Then go to the top right corner and click on filters to get only high impact news. When you reach here, check the red box and uncheck others because they do not have a significant impact on the market. Then after, click on apply. And you can see all these in red boxes are high impact news. This week we have news in Japan, Australia, New Zealand, America, Great Britain, etc. And the time is indicated. To get their details, you can click on those yellow boxes, right? So let's go to the next website, and which is the last one, and that is TradingView.com. TradingView is a chatting platform that enables traders analyze financial markets like forex, commodities, bonds, crypto, indices, among others, to make informed decisions. It gives you chatting tools like the trend line, the rectangle tool, the text feature, short and long position feature, has a fixed range volume profile, a free powerful tool to use as support and resistance, and know where the day's highest volume has been. Not only that, you can trade directly into TradingView, test your strategies, publish them out, and it has paper trading, and that is like copy trading. It has also unique indicators that you cannot find anywhere. It has an intermarket analysis feature where you can compare correlating assets like Euro USD and GBP USD. You can as well set alerts and has a replay tool. Though for this one you need to be having a paid plan and much more. Right, so I hope you have been able to find value in this video, and all these websites are going to improve your trading career to the next level. So consider subscribing, like this video and share it, turn on the notification bell icon to be notified whenever I post new videos. And until next time, peace, love you.